The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
Yes, it is. It is me, all Dave, all night, all weekend. And boy, am I tired. We'll talk about my weekend here in just a few minutes. But an interesting weekend in Tampa, to say the least. We had a lot of stuff going on down here. Of course, we've got a market that's kind of doing a little bit of rocking and rolling. Currently, what do we have the S&Ps at here? 1787 off 3 points. We were down as low as 1772. And I wrote in my newsletter this morning, I suspected that we would end out flat on the day today. I don't think that there's a lot of appetite to buy up from here. I think there was a lot of discussions, mostly on the infotainment, financial shows on Bloomberg and CNBC, telling everybody that you must buy every dip, and that people were selling the winners, and you should be out there buying those winners today. The losers were already down 10%. The big funds weren't going to take a 10% loss. They just couldn't do that. So you need to be out there buying the losers today, which were the winners, and people are selling what they can, and not selling what they cannot. And, of course, if you really know anything about the market, you sell your losers first and let your winners run. So just kind of weird advice from the financial infotainment shows today about what to be doing in markets. But we've had a lot of downside pressure that has subsided. Part of this is going to be what happens tonight, and that is going to be Apple earnings. But we'll be discussing that soon, too. 2.6 billion shares. So we have plenty of a volume to the downside. This means that we at least are probably going to go back and test the 1772 low that we had today, just on a short-term basis. On a longer-term basis, I think we're just seeing some of the problems that people have been talking about. Today in history, in 1938, after a protracted war with the U.S. Securities and Exchange Commission, the New York Stock Exchange finally recommends an internal reorganization that will install a board of governors, a salaried independent president, and a specialized administrative staff. Previously, the exchange had functioned like a private gentleman's club with conduct enforced mainly by unspoken codes of honor, and a pro bono president chosen from among his fellow brokers to run it for a very specific amount of time, generally fairly short. So you had pretty much a license to steal, nobody watching over you. And that all came to an end in 1838, although well into the 50s, these people acted just like figureheads. Not until probably about 56, 58 did more work by the Securities and Exchange Commission come in and formalize and ask these folks to truly be independent. And, of course, no one has to look any farther than 2003, 2004, with the head of the New York Stock Exchange getting 120 million, 150 million, whatever it was. Grasso got kicked out. No one could stomach what he was out here. Now, would I be surprised if it closed at 1800? No. Would I be surprised if we still closed out at 1780? No, we're most likely probably going to close somewhere around flat. The thing that has me going here is that everybody is as quickly as possible trying to say, don't look behind the man, behind the curtain out there at all those emerging markets. They have nothing to do with us. Just move along. Nothing to see here. Should people be concerned? Oh, absolutely yes. Emerging markets are a large percentage of the market. But, we've had a huge move down. We've had a little blowout here in the morning. And my guess is that they're going to sell this as a bottom that has to be sold, or it has to be bought. And, of course, a lot of these guys are going to be selling right into everything that bounces. But you've got to get a market that can accept some stock, and that isn't one that continually goes down. You may have to actually go in, buy some stock for a while, wait for the market to just kind of get a little boring, and then slowly start selling everything back into that market. But we haven't broken really above the flat level on the S&P. And, of course, we did go up a few points early in the morning. But certainly there's still a lot of volume, which tells me that we haven't got any kind of where close to a long-term bottom in at least the S&P, off 2 points with 2.6 billion shares. Other things going on, we've been looking at some of the other markets out here, and when you look at what's still off, now that the S&P is back to flat, still looking at the GDX off 67 cents, the GDXJ's off $1.70. And, we've been talking about these confluence levels. And if you were watching in Tiger and on Tiger TV right now, you certainly will see the confluence levels in this. I'm kind of colorblind, but it's kind of this, what is it, like pinkish color out here. And it ran basically up to $38.65. We got up to $38.22, certainly in that confluence range. And it started at 36.02. So these confluence levels work extremely well in trending markets, and we've had a wonderfully trending down market in these gold miners. And like I said, I think you would be, if you haven't learned confluence levels yet, you need to get Tom O'Brien's book on confluence levels. Alternately, he learned at least some of what he knows about confluence from Joe DiNapoli's book. Joe DiNapoli's book, I think, is $180 or $200, which I bought at one time and then resold on eBay, which is not a bad way to do it. But certainly, what you want to be looking at is just how these levels of confluence come in. Originally, Joe DiNapoli used all these levels on commodities and not much on the way of stocks. I think Tom O'Brien's huge input on using them on trending markets, both up and down, especially on equities, was world-changing to me. But these things do work extremely well. And like I said last week, these are going to be the places that you want to be looking at to logically take your money off a move off the bottom. Same thing exactly with the GDX. If you look at this thing, 24.48, 24.36, what does it do? Gets 24.19. That's it. And now we've pulled back from the top. Now, is that totally going to be it? No, but it's going to be very hard for it to break through there. And like I said, if you bought down there at $20 and you're up at $24, you got a 20% profit out here. What were you looking for? Were you looking for a great deal more than that? Nice move. You've got basically two different charts, both the juniors and the senior miners out here telling you the exact same thing. Are you looking for ABC ups now? Possibly. Or a retest of the low to go try it again, rinse, wash, repeat. What a gift it would be to get one more time down here at the $20 level in the GDX on very light volume, and maybe up on the next time, maybe it breaks that 24.50 level and gets you back up into the 26.91 level at the previous high. But we can still look at this. And what else did I want to look at? We were talking about whether or not Netflix was a three-gap play. I put this in on Friday. I think it truly is. It did have a movement down to $370 today, And, I've got it in here twice, so that's what's wrong here. And we're trading out at, what do we have? 386.30, something like that. Not a bad move out here, but probably not bad at risk reward. Somebody asked me about shorting this. To tell you the truth, I'm so short out the eyeballs already that I'm not looking for any additional short positions today. I will probably wait and see if we do kind of start setting up some kind of ABC down. But I have a feeling that we need a little bit more down to set up the first real bounce out of these lows. But what can you say? We're flat on the day. I expected that. I don't expect a lot higher. And we're going to get into Apple's earnings here shortly. During this week, it looks to me like they're going to do everything they can to get a couple of stinkers out in the IPOs. We've got Cara Therapeutics. Probably on Thursday. It's a clinical stage biotech opioid pain medication. Think Oxy. Dicerna Pharmaceuticals is going to be developing RNA therapeutics for treatment of rare liver diseases and cancer. Again, not going to be happening for a long time. Restaurants, Intra-West Resorts Holding. It's going to be a bunch of snow bunnies and all that kind of stuff. Skiing adventure company backed by Fortress, trying to raise $250 million. Kind of late in the season to be doing this. Snow's going to be the symbol on that. Malibu Boats. If I picked one that was going to blow up before it made it out the door this week, it would be Malibu Boats. These boat companies are notoriously for going in and out of business. They're worse than the airline industry was for 30 years. But let's see if this one even makes it out the door. New home company, another one which I think is going to have a problem, trying to build homes in California. There's a lot of homes still out there. I don't know what they're thinking about. And we're getting cash especially into California, which still has huge problems. And another Ultra Gen X, a clinical stage biotech. Look at this probably in a couple of years. Symbol's going to be rare, and just raising $75 million, so not a whole lot there. When we get into a lot of the other charts that I'm looking at, we certainly had enough energy down in the EDC. That's the emerging markets bullish ETF. And when we look at that today, plenty of volume already. It's gotten back down 5.7 million shares today. The last major lows on this 2.1 million, 1.7 million shares. So a pretty good indication that at least on this EDC, the first benchmark for all the problems we're seeing around the world in these emerging markets is going to be this $18.72 low. When we come back, we're going to get more of these.
Andy Hecht's powerful weekly newsletter, the Technomental Commodity Report, is going up in price again at the end of this month. Andy's weekly newsletter has delivered multiple profitable trades for his subscribers, even including a triple-digit winner within recent months. Right now is a perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy will also be hosting a subscriber event on Thursday, January 30th, Seasonality in Energy and Agricultural Commodities, that you can gain access to by simply signing up for a free trial to Andy Hecht's newsletter, the Technomental Commodity Report. A 30-day free trial to the Technomental Commodity Report, a free 60-minute live online webinar with Andy Hecht, which will be archived, and you lock in the low price of $49 a month should you decide to continue after your 30-day free trial. Offers don't get much better than this. Act now before January is over and this offer passes you by. Sign up for your 30-day free trial to the Technomental Commodity Report today.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different futures contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now you can receive a 2-week free trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
I don't know what this is. Let's fade it out. Interesting, though. Anyway, we are back, and yesterday, Friday, Thursday, Wednesday, I think they may have been Wednesday last week, Z in the Den asked us about what my impression was about Bitcoin. I said it would last until the government, which probably didn't like it, decided to go after it. And, of course, today, major arrests around Bitcoin exchanges. This one is one of the gentlemen that had one of the largest Bitcoin exchanges. His ran on a thing called the Silk Road, which was a kind of like the PayPal to eBay for illicit drugs and other bad things. And just a very interesting move in the legal aspect of going after Bitcoin. But my guess is that as long as it is non-traceable and they are not going against are going with all the rules and regulations that a standard bank goes with, that there'll be targets. And, of course, even the IRS is not giving anybody any idea how to file their taxes if they use Bitcoin. The question is, do you just accept what the person said? And of course, the IRS, they're not real big believers. I don't know what's wrong with them. They've lost their faith in humanity, I think, but certainly they don't like it. But what I'm showing on the screen right now is the complaint filed and sealed. The gentleman just happened to show up in New York and was arrested directly after getting off the plane. Anyway, when you get into this, it basically states that he helped more than a few people exchange cash and basically going after him for money laundering. But he did have the biggest exchange for dollars converted to Bitcoins and Bitcoins transmitted to Bitcoins. Very interesting when you read the complaint. I didn't have a chance to go through all of it, but pretty much everything you would expect in a money laundering RICO case is in it. And my guess is that the next thing we're going to see is a RICO adjunct to this complaint, probably over the next few months. But they've got him thrown in jail. He was coming back in the country. My guess is I don't think he is a U.S. citizen, and I bet he'll rot for several years before they even bother to come back after him. But Bitcoin getting a little stickier out here. Probably talk more about this on Friday's Tech Insider Hour about exactly what this means. But there's two things out here for Bitcoin today. That was one of them. The other one was the issue of them getting a hold of all the Tor emails from an email service that they went after. And the idea that there is any anonymity or the ability to transfer dollars anonymously is quickly going away. The email from the Tor servers was a way for people to come basically communicate and do it in a efficient email-like manner, but securely. And what they did is the feds just went and raided him, said that they were after a child born, and grabbed the server with all the emails on them. Of course, they are all encrypted. The question is whether or not the feds believe that they have to get a search warrant to go through the encrypted mail. My guess is not. So what else do we have going on out here? Earlier, we saw a lot of movement in MasterCard and Visa. Let's take a quick look and see just how much movement we have left yet. It doesn't look like it's been all that repaired. Let's get a quick update on MasterCard. The idea is that, especially in third worlds, it will still be difficult to get the kind of volume in MasterCards with a declining marketplace. So we're seeing MasterCard off right now, 3.5%, $75.78. Last tick. But look at this. It's blowing through the last gap up. We'll look at this and Visa when we come back a little bit more. Give me a call, 877-927-6648.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Interestingly enough, I didn't talk about it, but we'll get to MasterCard and Visa in just a second. But the Winklevoss twins, of course, these guys are the ones that were pushing Bitcoin over the last few months. Interestingly enough, yes, this is the same CEO that they got arrested today that was the CEO of their Bitcoin exchange that they put all that money into. I think that money is going to money heaven, Mr. Winklevoss twins, and I hope they haven't thrown all their money away buying a pig in a poke. But will be interesting happening. And, of course, we'll get into it in a minute, but we got more bad things happening over at Bank of America and some of the other banks, too. Let's look at these charge companies, first of all. Both of these things had kind of like gap ups. This one at the moment is still it's filled that gap on lighter volume, but the day isn't over. But I noticed that we're probably still lower than the entry point. The MasterCard bounced on the 11th of December with a huge volume of 25 million. You really didn't have a big candle there. Normally you want a big candle, big movement intraday. You had a nice gap, but you really didn't have a lot of price movement that day. But you had a lot of volume. Now we've gone back through that. So far we're going to probably be less than half that volume. So not a bad-looking chart out here, but interesting nonetheless that it's not holding up as well. One that looks probably a little worse, at least to me, is the no gap up from Visa. This one looks like it will have a little bit bigger problem, but looks like, what do we have here? You could get back into this $200 range without much problems. I think right now, the way this is set up, when the market pulls back the next time, this thing wants to come back to around the $200 level. And you can see a lot of weakness in that one, but MasterCard certainly looks better if you're trying to buy it off that level and set a decent trade up. If you were bullish on Visa and MasterCard, looks kind of hard for me. When we look at these markets, especially we brought up that emerging market 3X bull ETF. Certainly we have two nice gaps down below. So I think that there's enough downside risk. Probably a lot of traders looking at some of that risk to find out what they're going to do. We are up $1.70 on the S&P cash today, 2.8 billion shares. So a lot of volume still to the downside. And when I look at some of the shorts that I have, not doing a whole lot to repair themselves so far today. But we are going to be watching these things. Let's see what else we have out here I wanted to look at. Oh, we were talking about Netflix. We showed that chart. Trading off about 385 right now. Still off a buck. A lot of these things are going to have to digest a lot of these gaps that are in these. The other one that really I found very interesting is UNG. This thing hammered down today on heavy volume. And you could make a fairly decent case of a very bearish candle. Not a huge bearish engulfing, but certainly heavy volume back off this top. What you need to see is this thing come back down to around that $22 level, maybe $22.20, $22, something like that, and have this thing really see a lack of volume. Right now, it looks to me like you've had a little bit of a blow-off top. We've been talking about on TFNN a lot, especially we've got one of our traders here in the local area, Dave, that got a lot of this. Nice ABC up in the actual contract that looked like it pretty much finished up on Friday. So no big surprise out here as long as we don't want to get too greedy out here on some of these trades, lest the market come back at you. Let's see, what else did I have out here? We were going to talk about looking at Apple, AAPL. I was looking at the options this morning on this before the start of the day. I did put in my daily newsletter what I was looking for, and that is a plus or minus $25 move on Apple. I don't think that there's a great deal out here for the movement. What really more of a fundamental thing that scares me on Apple was right into this weekend, we saw heavy discounting by Best Buy to get some of these things out the door. Now, the question is whether or not Apple gave them a great deal so they could discount, or did they have to discount because things are so bad at Best Buy? Did they have to get some product off the shelves to pay other vendors? The questions are always like that when you get into heavy discounting, but there was a minimum of $50 discount on the iPads, and they went up from there depending on how many features that were on it. That's why I suspect that we are seeing probably some compensation from Apple on what they were pushing out there. So will be interesting nonetheless. 2.8 billion shares as we go through the day out here. We're going to look at a few other stocks. I think what we're going to probably get is an opportunity to move this market back up and test the 1800 level. A lot of people probably thinking, we're 20 points off the lows here now, and the worst is over. This is going to be, I think, one of the hardest markets to stay short in. I'm going to be sitting on my hands. I'm going to be looking for what Wyckoff and Jesse Livermore called abject demoralization. They basically didn't have all the technical tools that we have today. They didn't have the tick and the trend and all the other stuff. What they did was hang around a lot of other traders, especially in the floors and the stock exchanges. And they would gauge when everybody was totally demoralized in a bear run. And at that point, they'd start stepping in and buying their shares back and covering them. And well, that's the one thing I cannot see yet to make me think that at least even a short-term move is over in at least the S&P, NASDAQ out here, and that is some kind of huge demoralization in the markets. What else do I want to look at? There are a few things out here. We had a caller asking about shorting some stocks, and there are still some stocks out here that are doing some fairly decent parabolic moves. One of them that I've been looking at is WWE. I'd be watching this very closely, printing off in the mid-21s right now. This thing has pretty much taken off since the September, November, October levels. This thing has been ramping up, and of course, huge moves, huge volume. So you're probably looking at some kind of pullback and then a retest of these $22 levels. But certainly looks very interesting to me for a stock that's gotten, I think, way more attention than it probably should have. Now, on bullish stocks, showed a couple of them in my newsletter today. And there are stocks out here like MasterCard, Visa, that look like maybe they've come close to the lows. One of them was a Vitamin Shop. I am not bullish by any stretch of the imagination, but there are some stocks out here that are doing very well at coming back to their breakout areas on very light volume, and this Vitamin Shop VSI is one of them. This thing took off like a Atlas V rocket on the 5th of November with 5.4 million shares. We've had a nice slow pullback, and today we've got, 760,000 shares already today. And what you want to look at is some kind of consolidation about the $45, $46 levels, and we'll continue looking at it. And I think it's a question for me in the den. Don't know. It didn't say who they were asking about it. It was AET. We'll take a quick look. Aetna. Things come back down to its support level. It broke out not that long ago with 4.1, almost 4.2 million shares on the 9th of January. And it's come right back to the support levels. You would probably like this thing to close back above 69.47 or probably 69.5 to guarantee it. It's a little underneath that right now, which is one of the reasons I haven't hopped on any of these stocks. That you would love by the end of the day for these to close back into these levels. And I'm just seeing so many of these stocks hold these lower prices today, especially the ones that I'm short in. I don't see a great deal. Some of the other stocks that kind of caught my eye, a lot of these things we've talked about over the last few weeks have just continued to degrade themselves. But they're getting back where if volume does remain low, that you could start thinking about these. And IMAX, one of these things, just continues to look like it's going to go down and test the October 9th low at 25.28. But volume is and has been very, very light on these for a few days. JDSU is another one. This thing looks like it certainly could be basing out down at these lows. The last major low, $11.70 on December 12th, with just a hair under 7 million shares, came into with 6.6 million shares. So the volume hasn't really shrunk significantly. But some of these you need to be watching over a few days to figure out what's going on. Another one that could be a possible short from our caller last week is I'm watching MU. What you would want this thing to do is close back below either the 3x3 displaced moving average or a 9-day moving average. Either one of them are going to be pretty much the same. I'll go ahead and switch this to just a traditional 9-day moving average. You'll see it's pretty much the same thing. But what we do have is a nice bounce above that. We are closing above that, or closing below that today. And, you know, there is the opportunity. This thing, depending on how long you want to sit on a stock, probably headed back to the $15 range. My guess, though, is that may take the entire year to get back there, and there are probably faster horses when we're looking at them. JKS, which is JKS Steel. A lot of these stocks, if you haven't, JKS Genco Solar, a lot of these are in the TAN index, and it is going to be, we just haven't tested these previous lows. And this one in Genco Solar, I suspect that it, with a lot of the rest of the other solar companies coming back to these previous lows. High volume low out here on October 28th in Genco Solar at 1906. And I think we've fairly well broken the to the downside, especially Friday with the volume, the movement on these, and just probably a short-term bounce out of these markets, out of a very short-term oversold condition for the last few days. But we're only up 1 point on the S&P cash, and volume has been slowing in this second half of the show fairly quickly. But we'll be looking at some of these other ones. What else did I want to look at? Cree was very interesting to me, mostly because I was short it going into earnings and got stopped out. I think the chart still looks fairly decent out here. This thing could not hold the highs even with the high volume. What you do have out here, though, is light volume today. So this thing's probably going to make one more run at the $67 level. If it gets back up there one more time with light volume, I'll be pulling the trigger again today. But we've got some of these stocks holding a higher trading range. I think I lost 25 or 30 cents or 35 cents or something on my short. Did hold it through earnings thinking the thing was going to blow apart. It did open lower that day, closed higher. We sold it midday, but still problematic out here. Other stocks of interest, JDSU, we talked about that one, and IMAX, and it was at HDB, is that it? No, HEB. Could be that one. Trying to remember. A lot of these stocks out here. Let's look at gold. We haven't looked at gold yet today. Randgold Resources. We've been talking about putting together confluence levels on a lot of these stocks. And if you're using the art of timing the trade charts, one of the things that you will find is this control up here that's called legs. And it's just really trying to put together how many of these up and down legs are out here. But just about every one of these on gold, if you set them up to the longer term swing points on them, continue to work just absolutely beautiful for setting up the highs. This one, you were looking at what, 71.90, got to 71.50, right in the heat of that area.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Who has seen the wind? Neither you nor I. But when the trees bow down their heads, the wind is passing by.
Oh, my word. Did anybody watch the Grammys last night? Have I not seen a bigger affront to humanity than Yoko Ono coming out? The one last thing, God help us, that they didn't let her do out there was sing. And what's with this gal that's 17-year-olds trying to look like she's 35, dressing like a black sack of potatoes? Lourdes from Australia. Very interesting singer. Boy, dressing horrible. Half these gals looking like they went to the Elvira School of Makeup. The whole thing was just kind of goofy. I recorded it and fast forward through the sections trying to get past all the stuff about why I need to be concerned about their latest social issue of du jour. So I bypassed as much as I could of that. I really don't care what they think. As a lot of people said, shut up and sing. But I have to say, I was trying to figure out whether I liked a few of those acts last night. And did they really deserve Record of the Year? I mean, I've heard Fleetwood Mac's album. I mean, when you go back, especially when the heyday from probably 1969, probably 1984, maybe 1983, the Genesis albums, when you look at these things, this guy named Macklemore, I got to tell you, I don't think you can call somebody an artist that has one hook that they continue to replace it and chants a lot. And anytime anybody needs any singing, they have to come back in. It used to be called a duet when you had two people. Now it's always featuring this and featuring that. Basically, it means that those people can't sing and they have to drag people in. There's a few acts that were really good. I think Pink can really sing. She's got great songs. And if she would quit spinning around off all that stuff like she's kind of some kind of circus performer, I think it'd do a lot. I think she's got that kind of body that she thinks is a gymnast and always wanted to be one or something. But, great songs, great lyrics. When you get some of these people that win the Record of the Year, really get lorded over for what is, at least as I can tell, dark, deranged, and derivative music, not anything. And of course, I think you should be invalidated from winning a Grammy if anything in your song was sampled by someone else's song. That's all you did was just throw it back up. Kind of ate their song and then spit it back up like a 6-month-old. And somehow you're the artist now? I don't know. I'm kind of going off on a rant just because I feel like the kids are getting so shortchanged with crappy music that they call it rap. It should be called chanting because that's all they're doing, and it's not even good chanting. It's just kind of rambling and throwing a few F-bombs around. And I don't know. I just had to get this off my chest. But there was been no bigger affront between auto-tuning and sampling than Yoko Ono. And they dragged her out there, had anything to do with her. Just beyond me. Anyway, I was having such a great weekend. Ruined by Yoko Ono. She's making me reevaluate my thoughts on going all the way. Electric chair, I think. Electric chair for Yoko Ono. That's what I'm going for. See you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.